Hello, chart watchers and Decision Point faithful. Welcome to this Friday, May 10th, 2019 Decision Point show with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. Hope you'll be back. And for our regulars, welcome back. All right, let's get started. We have lots to cover as usual. So here's our agenda for today. Of course, we're going to cover the same things we do every week that you need to know. Broad market indexes, price relative. We'll do the weekly charts today. Of course, our DP indicators. Carl's going to cover the dollar, gold, oil, and bonds. And then our bonus will be the Bullish Percent Index. How's everything going up the hill there, Dad?
Getting really tired of trade negotiations.
I know. I have to say, it's certainly putting pressure on the market right now. All right, well, let's get started, and I'll begin with the decision point scoreboards. This week, we had all four of the scoreboard indexes move to short-term trend model neutral signals. And the way these are triggered is you have the 5-day EMA, and it crosses below the 20-day EMA, but it happens above the 50-day EMA. So that's why we went to a neutral and not actually a sell signal, because the 50-day, the 20 is still above the 50. We still have these buy signals in place in the intermediate term, so we don't want to go right into a sell signal on our trend models. Also, we look at the decision point sector scoreboard. We did get one new signal today, and that would be, not today, this week. We've got XLE, the energy sector ETF, SPDR. We ended up with an intermediate term trend model sell signal. So this signal is happens when we get the 20 crossing below the 50-day EMA, but it happens below the 200-day EMA. So you're sitting here on a long-term trend model sell signal. So when you get that crossover below and you're on this long-term trend model sell signal, we don't want to go to a neutral here. We move to a sell signal here. We're still looking at a neutral on healthcare, not making much progress towards erasing that. But that's pretty much what we've got going for the sector scoreboards right now. So let's go ahead and move along and look at some charts here for us. Okay. There we are. Okay, so we're going to get started. First of all, we're going to look at the price relative. So these are the price relative of these indexes to the S&P 500, which of course is the benchmark. So we want to see how they're all performing against each other. And right now, you can see the Dow, and it's not a surprise, the Dow Industrials continue to underperform the S&P 500. And the NASDAQ 100 is now starting to fade here as far as performance with the S&P 500. It's actually starting in the wrong direction. OEX, mostly sideways, but you can see that in the near term, we are starting to see some underperformance by the S&P 100 large caps. I think what's interesting right now is we're seeing the S&P 400 and 600, your mid and small caps, performing pretty much on par with the S&P 500 right now. Would like to see some outperformance here in those mid and small caps. That generally is healthy for the market. Looking at the actual price charts here for the SPY, and then you've got our equal weight that you can see as well. The one thing I wanted to point out on this chart is the fact that if you look at the S&P 400 and you look at the S&P 600, notice that they haven't really challenged their tops that were back here in August timeframe. So they haven't even come up and tested that. It looked like the S&P 400 might make an attempt at it, but of course it turned down beforehand. Whereas you have the Dow, it at least challenged those tops. And then you have the NASDAQ 100, which of course was able to break out from those tops. So that's really what I'm looking at right now as far as this chart goes. Again, really want to see the S&P 400 and 600 start to light up a little bit here. All right, so a global market indexes chart. Somebody pointed out we were using the TSX, but we had all the ETFs for everybody else. So I went ahead and put in the Canada ETF, EWC. That way we're going to get a little bit better picture. And interestingly, when I put up the ETF, it did show that overall, the Canadian markets managed to break out of that bear market trend there, that declining tops trend line, but it's faded fast. Germany finally broke out, but as you can see, long way to go before it even starts challenging some of the tops that we saw back here in the summer of last year.
Erin,
Mm-hmm.
the EWC, I looked at that and then compared it with TSX. I'd like to stay with the ETFs, but in this case, I think we need to change it to the
if for those of you who haven't watched previous shows or look at the Decision Point Live chart list, where this chart is for you every day, we did have the TSX, and when we had that in there, it showed that the Canadian markets were certainly outperforming our markets.
Yeah, they were challenging previous highs.
Mm-hmm. Well, you know what? We can show people how you can change something up very quickly here. Dollar TSX. And then you're going to see the difference because I still have that declining tops trend line here. But notice a lot different. We're seeing some rising tops. So the Canadian markets certainly seem to be keeping up in par with the U.S. indexes, because we see that the latest top was higher than the previous tops that we had here and here for them. All right. That is that chart. Let's go ahead and get into the scoreboard indexes very quickly. The Dow, the industrials, as we saw, have been underperforming the S&P 500, so not a surprise to see that bearish rising wedge execute. This point, I was looking at support here at that 200-day EMA, possibly at this bottom that we saw in the short term for March. It's sort of the area I'm looking at as a possible point of a rebound or a throwback rally. We'll have to see what happens there. The weekly chart. There you go. Notice that really long-term rising bottoms trend line. Of course, I didn't leave this in here, but we have moved below that. If you drew the rising bottoms trend line here, you'd also see that we had broke down from that as well. So not a good sign. And then, of course, we've got the buy signal is in place, but we saw a top this week on the PMO for the Dow. And you'll see that, I'm pretty sure that's on all of my weekly charts right now. All right, NASDAQ 100, like I said, underperforming right now. The S&P 500, we've now broke down below that top we had in March. Next area I would be looking for support is around 7,300, which would match up with the lows we had back here, the top we had back in October. So I'm going to be watching that area of support at 7,300. I suspect, given the ugly OBV and the pretty ugly PMO, that we will probably go down there and test it. As far as the weekly chart for the NASDAQ 100, there you go. We can see the big breakdown that occurred this week. And we didn't actually get the PMO topping here. Mostly sideways, certainly decelerating, which is not good news. The OEX, very similar chart to the S&P 500. Rising wedge has executed, testing support at those tops in October and November. Still on the sell signal, very similar OBV, with the volume certainly moving down quickly to the downside here. All right, weekly chart for OEX. Again, you're not getting a top here, but certainly deceleration, something to consider and keep in the back of your mind. Oops, I didn't want to go to that one yet. Okay. All right. This is the one I'm pretty interested in myself. Everybody else is as well. So we had the rising wedge. The kind of unofficial way to see how this pattern, the minimum downside target, how you would do the measurement, is the top that you started your wedge at and the bottom that you started your wedge at. Make that measurement and then take that and add it to the breakdown point to the downside, and that gives you your minimum downside target. So we're getting down there to challenge that, and I suspect it'll be a minimum downside target. I suspect we will fall below that level probably next week. I don't know. We'll see if we get a rebound, but the trade talks certainly, as my dad and I talked about before the program, putting pressure on the market, no doubt. The weekly chart for the S&P 500. You know, I've been talking about this rising bottoms trend line, this very steep rising bottoms trend line, and how that is going to be very difficult to maintain. Well, we weren't able to maintain it. And if you look back here, we actually last week closed just beneath that, gave us a little bit of warning possibly here, but for the week down over 2%, and then there you go, PMO decelerating as well. Hasn't topped like the Dow.
It's a good time to mention the double top, I think.
Oh yes, we were talking about that. This could be a double top that we're looking at right here. I mean, it fits the textbook. It's coming in off of a rising trend. The confirmation line would be all the way down here to about 2350. I know you and I talked about it, and we both don't think we're necessarily going to come all the way down here and test that confirmation line, but should we, then we will have to think about this measurement and the possibility of, you know, the bear market moving back in to town, and that would give us a measurement. Probably would take us right down here to those lows back in 2016.
Yeah, something like that. It's a long way to go.
Yes.
From where, you know, from the top, it's a 20% decline.
Mm-hmm.
So that's just to get the execution of the pattern. So,
right, exactly. I mean, it's not, as we always talk about with chart pattern, it's not really an official pattern until it actually executes. So we're looking at the possibility of one beginning to form here. So good point. All right, let's go ahead and look at our indicators. And this is going to be I'm going to annotate because we haven't seen these numbers just yet. I had suspected we weren't going to see really climactic numbers here. And I have to say that we didn't. Certainly that's an increase, but I wouldn't call that climactic when you compare it to the tops we've had here before, and certainly not the new highs. We've been watching the penetration of that lower Bollinger Band, and the expectation, of course, right after it, punctured it, is at that point you start looking for your rebound. But the problem is when things get extraordinarily volatile and we start looking at these higher volatility numbers, this can persist. You know, the Bollinger Band is working on widening here to, take that into account. So we had penetration after penetration. Now we're back up in those Bollinger Bands, but notice we are still below the average here. So, you know, today's movement, I would have liked to have seen some more climactic moves here to give us, a look at a possible, buying initiation here. But the numbers just don't support it at this point. I don't know. What do you think?
Look back in October, the VIX, down to the VIX, and notice that it penetrated downside and then it bounced back up, but it never even quite made the moving average. So that could be the kind of thing we're going to look at.
Right. Maybe a short little bounce back. Yeah.
Continuation.
Maybe a dead cat bounce. We'll see. All right. Short term. Let's go to the short term indicators here. All right. There we go. Clearly dropping. For a bull market, I would say we're oversold. But we're in the midst of a correction. We were in a bear market. I still see that these have room to move lower. You could see that even down here that we're getting close to some of the lows that we've seen. That's good. I mean, we want to see these indicators get oversold, but I think we could certainly accommodate more on these indicators. And the intermediate term indicators, pretty ugly. They have been ugly, but as you can see, they're continuing to accelerate down, and they're about ready to test that zero line, and we certainly don't want to see it get below that. All right, you're going to be up. Let's get your charts here. I am passing the baton. There we go.
This shouldn't take long.
I know, right?
I'm not very excited about this group today, but here we have the dollar in a rising wedge, very loose rising wedge. Let's go to the weekly where you get a little bit better perspective.
Yes.
Okay, we can see the long-term resistance just above, and I don't really have a sense of what would make the dollar go above that, significantly. So I'm looking at trading range, and I'll just leave it at that.
Yeah. Well, the rising wedge is bearish, so
Okay, still looking at the head and shoulders, which executed, but since then we now got a double bottom. I thought I'd put some arrows under that. Whatever. It's yeah, but you have the double bottom, so which is not a really realistic or reasonable follow through for the head and shoulders. We spoke about it earlier, and we'll see it on the next chart. But I probably will abandon the head and shoulders structure next week and put in a rising, falling wedge, which we can see that on the weekly.
What? Yep, there it is.
Okay, and it's also a falling wedge. It's also a pennant formation. So even though the weekly PMO is topped and has moved below the signal line, I'm still somewhat optimistic about this resolving a bullish way.
Mm-hmm. We do have really high discounts right now.
Sentiment,
sentiment. Those conditions, by the way, though, those discounts can persist for a long time. So I'm pretty sure you don't use it as a timing signal, and I know I don't, but it's confirmation.
It just gives us an idea of it can change very quickly, too.
Mm-hmm.
Okay, we're at USO. Not very exciting. It did exit the falling wedge in the right direction, but it's sideways, so it's like a default.
Mm-hmm.
So it's not a very excited.
It just drifts out of the pattern.
I'm thinking that we may have seen the top of this run from the low in 2018.
Mm-hmm.
And I'm thinking that possibly we're going to go back down towards that low.
Mm-hmm. Yeah, PMO certainly suggests it.
Right. Here we have the rising wedge resolved downward. But the weekly PMO is still moving higher, but it's decelerating.
Mm-hmm.
And my feeling is that it's going to be going lower.
Yeah. It'll be interesting to see if those EMAs hold up as support. All righty, TLT bonds.
Yeah. Again, we're just looking like it's decelerating. If you look from the middle of the chart, the bottom, and then as it goes up, it looks, robust, and it's suddenly running down. Let's go to the weekly chart to get a better sense of why that might be. And it's run into that overhead resistance. It's kind of chopping around through it. But again, I'm not. It's a positive chart, but I don't get a positive feel from it. Yeah, but you see the overhead resistance. Bonds, unless they lower interest rates, I think that's probably the upper limit is that top in 2016.
All righty. Okay, bonus material time. We didn't get to quite finish the discussion about the bullish percent index. So we're bringing back some of those charts and we're going to talk about them now.
Yeah, see if I can run out of time again before I'm done.
We've got 8 minutes. You're good.
We'll see. I moved these lines around a little bit, but noticing that the high in the BPI for the S&P was much lower in October than it was at the beginning of 2018. So even though now recently the BPI has exceeded that October top, moving back down again, and it's basically in a negative configuration at this point. Same with the NASDAQ composite, and same with the New York Stock Exchange composite, although it did get higher this most recent top than it did from the October top, but
it's still not really challenging.
it's not where it needs to be. Let's try the next chart.
All right, and just real quick, I don't know that we talked about the bullish percent index is basically you're looking at the amount of components that are on a point and figure. What is it? Not a buy signal. It's not a buy signal, right? It's a
figure buy signal.
Yeah. Okay. So we're looking at the components of the index and seeing how many of those components are on point and figure buy signals. So, all right, let's go.
Okay. First, I've got the red rectangles are bear markets of one kind or another. The one there in 1998 was a short one, just barely made 20% down. And the same with our most recent bear market was about a 20% down, just shy of it for the S&P. The secular bear markets, two of them during the first 10 years of the millennium. Also, you notice how the severe bear markets, they get a lot of chop below the 20% line.
That's the 20% line.
Right. Okay. Let's look at negative divergences starting in 1998. Very sharp negative divergence on the BPI versus the higher high for price. And again, let's see, the next time we see something significant, it's 2007. And again, against the higher prices. Again, in 2011, that was actually a pullback. It wasn't a bear market, but it's certainly a significant pullback. And then the last one was, in 2018, against the higher price top. So that's, again, a significantly lower tops on the indicator in bear market setups. We have positive divergences. In 1998, we had that one. Notice we had a double bottom in 1998, unlike the spike bottom we got just recently.
Yes.
So, okay, there now in 2002, 2003, we had a series of higher lows, marking the end of the bear market. Again in 2008, 2009, and then for the corrections. They even had nice little positive divergences.
Mm-hmm. Oh, you've got this one in blue.
Yeah, to show that there's a divergence there, but I'm not. It goes against such a long time period. I'm not sure what to say about it.
Mm-hmm.
It's there, but I'm not sure in real time if it would be helpful.
Mm-hmm. Now the ovals, the green ovals.
Right, they're just corrections.
Okay.
The market didn't go into a cyclical bear market.
Mm-hmm.
We were talking earlier, and we'll change the subject here, but about the trade talks, and I've been giving it a lot of thought, and I think that we're going to be stuck with it for a while, because I thought maybe with this latest pause in the talks, we'd be getting a respite. But I think the next thing we're going to see is a retaliation for the tariffs from the Chinese.
Mm-hmm.
But the important thing to remember is that they may have different objectives than we do. Their objective may be to make President Trump take a political hit by not getting a trade deal. Now, it seems to be in their best interest to get one, economically, but it's not necessarily the way they look at it. That may not be their primary objective.
Right. And that's, those kinds of uncertainties are what drive this volatility that we're seeing on these markets. I mean,
Right.
That volatility index is, going crazy right now. And like I said, and we talk about it on Market Watchers Live too. When you start seeing volatility the way we're seeing it, it's great sentiment as far as, oh, they're really high numbers and we should look for a rebound, a short-term bounce. But the unfortunate thing is when it starts to get very volatile and you get these high readings, honestly, that's when it gets a little bit harder to decipher.
Right. And since we have a minute or two,
Mm-hmm.
You notice we were watching the VIX come down to that lower Bollinger Band, and it did puncture it there briefly, and then that's usually a sign to look for a reversal of the price trend upward.
Mm-hmm.
But notice the VIX got just up to the moving average. The VIX itself got up to the moving average, 28-day moving average, and then it went back down again. So that's a real negative sign. Of course, it's all very short term. But again, after that, we got followed through to the downside. And on, I guess it would have been Wednesday, the VIX did bounce, but didn't quite make the, it hit the outer bottom band.
Yeah, it was completely below it on Wednesday.
Right, but it just wasn't enough. So
no.
Yesterday we did get a bounce back up to that line, and today, of course, we did get back into it. But I still.
All right, I got to cut us off, but we had a great time today. I know. Thank you all for being with us today. Remember to complete the survey, and we do air Fridays at 4:30 p.m. Eastern. Have a great weekend. Happy trading.